today that looks for a housing recession that could send prices about 20% lower. Again, there's no gospel, fact here that has to follow that trajectory. But what do you think of that?
Well, I think it's going to, Neil. If we look at the trajectory of interest rates, they are going to continue to pound the value of real estate. And what's disturbing about that, too, is most people, the average American who's a homeowner, that's where their wealth is. So they're really going to be taking a hit going forward. We see that the 30-year fixed, as of today, I believe, was at 6.25.
6.29.
Yeah, that's going to continue to rise, Neil. I don't think it's going to take much time for us to be north of 7%. That's going to have a devastating impact on the real estate market.
But when you buy a 1 year or 2 year, I mean, you can buy as much of it as you want and no limit. Well, is that going to actually compete with the very banks that are offering these more tantalizing rates?
Well,
not many, by the way.
We're going to have to see how that plays out, because as banks, as Gary said, start to compete against each other for CDs and get those deposits in. And then when we have treasuries 1 year over 4%, a lot of people are being scared out of the market, Neil, and are saying, hey, listen, this is a great investment, and it probably is going to go even higher. So if you look at the trend of what's happening here in the market, Neil, I don't see where it's going to reverse anytime soon based upon where we're going with interest rates.
I don't liken this to the meltdown. I don't see the devil may care attitude, certainly with real estate or people buying homes sight unseen and then trading them and selling them and buying them again sight unseen. People approved for mortgages just on the basis of having a pulse. I don't see a lot of that craziness. Now, it might be out there, and it doesn't dismiss the fact the correction is in order. But what do you think?
Well, no, I don't think that we're
Because I'm using that as sort of like that litmus test, how real estate fares through this. Because that is something that's pervasively more of an impact, I think, on the economy than the mere stock market.
Yeah, Neil, I think that the fundamentals are a lot stronger right now than they were in 2008 in real estate.
Can it save us a meltdown?
It probably can. Look, there's still quite a bit of demand out there, even though we're seeing prices going up and we're seeing interest rates going up. Look, congratulations on that $250 million condo purchase, Neil. So the demand is there.
But Tucker and I were going at it. I mean, he was going to put up like old oil paintings and all that, but isn't that a sign of strength?
Of course it is. Yeah. I mean, there's still people with
Someone's
money.
going to buy that, right?
Right. Let's hope.
I'll keep fingers crossed.
Let's hope that the experiment that's going on with the UK related to reversing the tax structure, lowering taxes, right? And let's see how that plays out.
No, that was not the market's reaction or the pound's reaction.
Well, let's see when that sets in, Neil.
Right.
And not only that, going towards fracking and more energy production. Perhaps if they can go in a different direction, our country will take some lessons from that and change course.
Doubt it.
All right, they're both referring to Liz Truss, the new Prime Minister of Great Britain, who has outlined plans to sort of put a freeze on utility bills in England, which are running at about an 80% year-over-year clip. And that is back with Gary Kaltbaum and Dan Geltrude, how bad it gets. Dan, what do you think?
Well, the direction we're going in here, Neil, looks like it's going to get pretty bad. It's a bloodbath out there with all the red on the board.
Your colleague and friend there was saying we have potentially another 20% to go.
He may be right. I mean,
Let's not talk to him. Let's just see what I. All right.
Listen, Neil, I think we can turn this thing around. If some people in Washington maybe would get the memo and we would start changing some policies and start dealing with these issues on the supply side. That's something I've been saying from the beginning. And until we do that, until we start to fix supply chains, I think we're in for a tough go here. Gary, when we were talking before, and I know you're not a big fan.
We were talking about food.
We were talking about food, but when we were talking about Jerome Powell, I know you're not a big fan. But there was one thing he was actually right about. Pain.
Yeah, great.
Right? And that's really what we're looking at, right? Because if you look at
Apollo Creed said that.
well, wasn't that Mr. T?
Oh, you could be right.
Right.
That was the second or third Rocky.
Third. Right. Rocky 3. So pain is what we're talking about here. And let's look at, since Joe Biden has become president, Neil, The average American has lost $4,200 worth of buying power. So you have people who can't buy the stuff they used to with the same number of dollars.
But he points to the job gains. He points to the backdrop that's being pretty solid. That's what he goes on. And that is the big distinction between the 70s thing.
Yes, but look at the board here, Neil. People are watching their 401ks, and they're literally disappearing. And the values of their homes.
You should probably watch the stock market more, because Donald Trump watches it all the time. And he brags that is President Biden, that he doesn't. You think he should? Yeah. He says that's not Main Street.
Every president, when the market's going up, it's because of them. When the market's going down, there's crickets. So that is just the marketing of the presidency. I don't blame them.
But the Fed can over-obsess with the markets, can it? And should it?
Oh, listen, that's just people with opinions. And unfortunately, $9 trillion created this gigantic mirage of valuation and just some of the most ridiculous moves that we've ever seen. And now we get in the opposite side, unfortunately.
So what you're saying is you pity the fool who doesn't look.
Pity the fool.
That's the best I could pay.
Well, that was a heck of an impression.
No, I bet I missed my. These movies are all kind of blurred into one. Guys, thank you very much again.